Hey guys. All right, day two on this GameStop squeeze, I believe. Hype squeeze has begun. Um Tried to get sleep last night. Got some pretty good sleep. Was up in the morning checking the price. The fact that this is even up at all after hours is crazy to me. I thought they'd be short ladder attacking it after hours and stuff, but this is pretty good. Oh man. Okay. I wanted to go over some of the DD and some of the Wall Street bet stuff. First of all, today I'm expecting. I don't know. I don't know what to expect, but I'm going to be holding. I've got options that expire on Friday. Today is not Friday; it's Thursday. So then I've got options expire next Friday. I'm going to be holding it. It might drop down a lot. It might even halt going down circuit breakers. So that could happen. Yeah, but let's go over some of these. So first little thing right here is kind of cool, and this is kind of he's just kind of comparing the last rally that went to almost 500 with where we are now. So showing that it had a big run and then a huge drop and then rallied. He's saying 10:30 a.m. crash, 12:30 rebound. So just a loser looking at charts. Wildcats prediction open around 150, 175 range. Have a really sweet melt up to about 10:30. See steep crash till 12:30. Bounce off previous day mid, maybe 65. Then calm down. Open huge tomorrow. Hold him by the dip. That's kind of his prediction. I don't know where it'll go. So to me, if it's shorts covering, they're buying shares, so that's driving it up. There's also other hedge funds and other big institutional investors buying in for this run for sure, and I think that's what started. I think that's what we've seen all yesterday. It's not retail that's trading billions of dollars worth. And if you argue with me, I'll just send Uncle Bruce to you. That's what he said too. But I can't remember what I was saying. Anyways, we'll go to the next one. So some people say it's not short squeeze, it's a gamma squeeze. I hear the argument. I'm not sure. To me, I didn't see a whole lot of activity on the 800 calls. They were cheap. There wasn't a whole lot of open interest on them. To have started this rally. But yeah, so this basically, this is a gamma squeeze if it hits 800 before Friday. And because basically when you buy a call option, the market maker, if that gets in the money, has to produce those 100 shares that they agreed to sell you for that strike. So basically they're trying to buy up any shares they can. If there's not many shares to buy up, that supply and demand, the price is going to go up until you tell them what you'll sell them for. So that's why people are saying hold, don't sell, because you're literally dictating how much it's worth by not selling it. You want to go buy a car, they say I don't want to sell it. You start offering more money, they say no. You start offering more money, they keep saying no. There's a point when you offer enough money and they'll sell you that car. Same with the stock price. If you keep saying no, the price will keep going up. The ask. Or the bid rather. As Melvin admitted in the congressional hearing, they did not cover, and the spike was from gamma. So this was from last squeeze, whatever kind of squeeze it was. I don't know how much of that is true. I take all this with a lot of grain of salt, like super salty. But if it was, then yeah, we haven't even started short squeeze. This has all just been gamma. The first one didn't feel too much like a short squeeze. It felt more like a kind of a hype run. And yeah, there was a gamma squeeze in there. That actually did happen. I wasn't aware of gamma squeezes before that, but from what I've learned about it, it makes sense. Here you go. This is explaining gamma squeeze. Falling back down to zero. We have a catapult cocked down so far as it can go, ready to be launched. Millions and millions and millions of shares be written in this calls options all the way to 800. These shares are not only buried in the 226 calls, but every single date after this as well. So many shares. If we can get to 800 by Friday, all these calls become in the money. Market makers will have to scramble to buy millions and millions of shares that will surge the price up. So that's the gamma squeeze. And the craziest part, it doesn't even take into account the shorts covering. So that if the shorts aren't covered by then, that'll be crazy, because then they'll have to start covering. That'll also be short interest. If you didn't remember the last post, short interest being 400. So I've heard so many different numbers on this. There's synthetic shares, there's fake shares, there's counterfeit. Like I don't know. I don't have access to the information. I don't know if anybody honestly does. Even on the inside, maybe they get different stuff. Some people are counting the whole float, so synthetic shares that are borrowed to naked short. Oh man. All right. So if it is 400% short interest, that's insane. The lowest I've seen is 40% or like 37%, and 400 is the highest. I've seen quite a bit around the 80% range. This guy, the bat, he ran AI generated a model of GME stock price, which predicts a squeeze target range of an extreme $130,000 a share. You guys think I'm crazy when I say 5,000? And then if you see some of my comments to your Twitter posts, I couldn't find that chart, but I saw a chart yesterday on here showing, I'll just explain it, showing where Volkswagen was for the amount of shares they had, the volume, basically, the float. When it got squeezed, it became the largest company in the world by market cap. It passed up Apple at the time, or whatever company was the biggest. I think it might have been Apple in 2008. No, it wasn't. It was some other company. Maybe Microsoft or IBM or something. I'm not sure. But it became the largest company in the world, and I think the share price was like $1,000 or something a share. Don't quote me on this stuff. However, the point is that for GameStop, the amount of shares that are in the float, for for this to become the largest company in the world, which I'm not saying this squeeze will cause that to happen, but for that to happen, that's, I believe, where they're getting this $130,000 a share price from. I'm not certain, because on that chart I thought that it would have to be $35,000 a share to be the largest company in the world, or around thereabouts. If you see that chart, it's just a real simple little chart showing the different things. I haven't been able to find it. I looked for it and I couldn't find it, but definitely put in the comments or share it, tweet it out to me or whatever. This calculation might be based on something else, but yeah. So now this outlandish number. I believe we've released a game of squeeze that will occur if we hit 800, is what predicted. The AI model predicts $130,000 shares, predicting that because it believes that 800 will hit before Friday, therefore causing the mother of all game of squeezes. Infinity short squeeze send us to 100,000. Yeah, not financial advice. Yeah. Okay, and then we saw this, and I mean it could be a long way out. One other guy was showing on the chart where you are. If you look at the Volkswagen chart, we're at the very beginning, and this might be like a month out. I don't know. I think after this rally, if it does have a big dip and a big settle like this, I think I'll be just swing trading GME, holding shares, buying at dips, honestly, until I mean, it's a good long-term hold, so I'm fine to do that too, but just to be prepared. Even with options, you can make a lot more, but I don't want to be burning options on premiums waiting for it. So I'm just saying after this is done, whenever that is. Okay, so some people are saying that this all started from the tweet from Ryan Cohen. Different people had different interpretations of what this frog meant, and then a McDonald's ice cream cone. So I guess on their board meeting, they went, and for Chewy, they went and all had McDonald's ice cream cones. Some people are predicting that this is Froggy MACD, which is technical analysis indicator. And to me, this is, I don't think this did anything. This was tweeted out, let's see, 157. So if we look at the stock price yesterday, I looked at this pretty close, but I don't think this was it. So 157 is right here. This is when it was tweeted. And if you watch the stock market and watch news, when news actually hits, it's immediate. Literally, I was here through COVID, it's here through Trump. When they start talking about something specific, that ticker immediately starts moving. So given, yeah, I don't know. It was shortly after that, but it definitely wasn't right then. It was, what, an hour later. So, and this isn't a catalyst to me, honestly. So, anyways, yeah, that's what they're saying. Okay, this guy actually covers a lot of the points I was going to cover, so I kind of just want to go over this one. It looks like it's price driven by people purchasing one share at a time. I mean, I see what he's saying, but I don't think so. That doesn't mean anything to me. 407,000 GME option contract traded today, 64% on the call. Call volume was in the 800s today. 800 calls were up 7,900%. My calls were up 4,000%. I don't have any in the 800s. There's been a huge interest in spike of people looking up, Googling. Yeah, there's the Google Trends. Looks like a strong buy bullish, technical analysis. Someone is still short a lot of GME. See this? Now he's saying 40% short interest. So yeah, they're all over the map. 407,000 GME option contracts traded today. Question, will it reach 800 before the option expiry date? GME is going to keep going up. Technicals and charting looking great among all other things. Looks like the real reason tech was selling off. Okay, this was a big thing I wanted to mention actually, was because hedge funds had to cover their GME short position. So this, I read this yesterday, the day before, and I was like, oh my gosh, could that be? I didn't even think of that. And then I read that, and then actually someone close to me, he just mentioned that and wasn't even, he's like, is that why the tech sold off? I'm like, oh my goodness, that could have been it. Because if you remember when this happened before with GME, it was there was a huge sell-off on the market. Market was so volatile and selling off during this time. And what people are saying is that hedge funds were having to cover their shorts, or starting to cover their shorts, or starting to prepare to cover their shorts by pulling out of their long positions, by selling the stocks that they had long positions in, basically building capital. So what happened yesterday with the SPY right here, the S&P 500, which is the biggest market cap. Look at this. I mean, if you were watching the market yesterday, this was a huge drop. We were almost hitting circuit breakers on the drop, which is insane for the S&P 500 to do. That hasn't happened since COVID. Given it rallied back up right away, but there wasn't a whole lot of explanation for this. They were saying it was the bond yield, the scare of the bond yield rising or the interest rate rising. They were kind of waiting for Jerome Powell to talk. He spoke here, and the market rallied after that. I don't know if it was the bonds, interest rate, or if it was, I mean, it could have been a bit of all of it, or if it was hedge funds pulling out of other positions, getting ready to cover GME, because next day GME has this massive rally. And yeah, so that was it. And then I saw him say it here too. I'm like, maybe. The majority of the retail investors still don't have access to after hours trading. There has to be algos, hedge funds, and day traders battling one another. Yeah, after hours I'm not too concerned about. Like I said, I was surprised it held up here and kept rallying. I thought it'd be, it'd be back down here after hours, and then, not to say it's over, I think it's gonna shoot up, but I was just surprised that, yeah, it kept rallying after hours. I bought 40 shares. Yep, that's so to me, I'm thinking I want to, pigs get slaughtered. That is a expression and is true, but that's why you just scale out, and with the time that you're comfortable with. And I am going to do the same thing. I don't know if I'm going to scale it at all today, honestly. My contracts don't expire till tomorrow. I think they'll maybe. Someone said they can't do any short ladder attacks anymore. I don't know if that's true or not. There might be that today. There's going to be halts going probably both directions, going up and going down. It's nothing to panic. Don't do market orders. I'm not going to do market orders, I should say. You do whatever you want. This is not financial advice. If you do market orders into a halt, the market maker can really screw you. They can basically sell or buy. You're going to end up buying it or selling it, whichever way you're going, or pretty much whatever price they want. Yeah, so market orders are a big no-no in a volatile time. Got to do a limit order. Do it at the ask. Don't be greedy when it's volatile and you're trying to get out. It's hard to make predictions. You guys want, predictions, what's realistic? I don't know. That guy says $130,000 a share. I've seen $35,000 a share. Some people are like, this is insane. It's not going to stay at 200. It's going to dump today. So my belief is it's not going to dump today. I mean, it might, but I think it's just spooling up for something big. So if it dumps today, I think it'll come back up even today. I don't think we'll close today red, basically. So yeah. Whew. Try and control your emotions. Yeah, I don't. So I wanted to see what you guys thought. To get more skin in the game for me, I was thinking on my calls. It's funny, I was talking to my wife about it, and I was like, she even brought it up. She doesn't know anything about stock. I mean, she knows some, but she's like, oh, well, you could just exercise those. I was like, that's true. So I'm gonna see what you guys thought. I could exercise my $67 calls, and then I could have, you know, $6,700 worth of shares, and maybe that's the best way to get my skin in the game, because this will expire Friday, and if I want to hold a position after it, because this is just intrinsic now, meaning it only moves with the stock price. So every dollar their stock price goes up, this goes up $100. So it's like the same as owning shares, from my understanding. I've never exercised a options contract. So anyways, starting to rally into the open. This video won't be uploaded for a little bit, so we'll see. It might dump right at open. I'm gonna hold. I mean, yeah, I'm gonna hold my options. My shares are much easier to get out of. I mean, even if it's halting, the options, once it loses sentiment, those things will drop 100%, 500% super quick, because this thing's already at 4,000. It can drop 500% just on a little bit of downward momentum. So that's crazy. That's why it's options I gotta be careful with. Don't trade options if you yeah, you need to study to do options. Lots of research. All right, thanks for watching, guys. Sub up, like up, comment down. Happy money sticks around. I'll be back soon. I might start streaming. This is too gnarly, too stressful really for me to want to stream. I just kind of want to relax, and been listening to Major Tom, just getting some theme songs going for this time, this special time in my life. I mean, this is big for me. Like, I've only been in the stock market just over a year now. It was like November of last year, or 2 years ago rather, and but I've been on it constantly. So I've got over 2,000 hours in the market, studying, watching, experiencing the emotions of losses, of wins, diamond hands, paper hands, all that. Learning how to deal with your emotions is the biggest thing that you can't just learn from research in the market, or that. It's really just experience with it. All right, we'll see you guys soon. Thanks for watching. Peace out.